So how are you doing out there? It's been an excellent week in the stock market. For me, it's been the best week I think I've ever had in the stock market. It's been fantastic out there. I hope you're making money. But there's a few points I wanted to make today, and hopefully these points help you as an investor and also gives you some clarity on the direction myself that I'm now transitioning into a changing market. You know, this is not the 2022 stock market anymore. This is the 2023 stock market where things have changed around a little bit. There's that bull market coming back. There's a bit more optimism coming back in the market. Growth stocks are no longer thrown out. You know, that people are going, oh, you know what, I'm going to buy a few more shares in them. So the market's changed a little bit in the last 12 months, and I'm going to hopefully today update you where I'm at, what I'm buying, what I'm not buying anymore, and the change for me personally that I've taken, the pivot that I've currently taken. So before I get onto that, just let you know, if you are on the Patreon, I've just dropped my UK portfolio review for July. So if you do want to watch that, go watch it. If you do want to join the Patreon to watch the exclusive content, the link is in the description. But we'll get on to the pivot that I'm kind of doing in the stock market right now. So DraftKings, obviously another really good day yesterday, up 22% in the last 5 days. Unbelievable. HIMS up 5%. I was really surprised by this. I don't know if any of you guys actually saw this news here, but there was actually a short report. A short report came out from Spruce Point Research. I've actually never even heard of these guys. But they came out with a short report. I've not actually even read it because most of these short reports are just absolutely bogus, made up stuff and attempt to make money in the short term. I always never get a short report on a company and then they go, oh, but we expect shares to fall 25 to 40%. Well, surely if it's something like this, then majorly, like, you should be expecting the stock to go to zero, not like just a small drop. So they brought this report out. It dropped like a few percent in pre-market, and then for some reason, everyone took that as an opportunity to buy it. So the stock was actually up 5%, but on the day, it had like nearly a 10% swing on the day, which was absolutely crazy. So yeah, strange move there, but I thought we'd talk about it. PayPal, another good day from PayPal. Seems like it's hit the bottom a little bit at the moment. Up 10% in the last few days, and really since it hit that kind of that 52-week low of that $58 around that 25th of May time. It looks like the stock has kind of rebounded from there, and looks like it's on a bit of a bull trend now. And that's probably, you know, in my opinion, probably the lowest it'll ever go to and go on a run here. And you never know. But yeah, I think that it just got absolutely crazy low levels, and I am a little disappointed it didn't stay at $58 a lot more. You know, I would really love to buy more shares in that price range, but now it's kind of rallying up a little bit, and I'm like, you know, I don't really want to buy that anymore. Meta once again up 1.32% today. In the last 5 days, up 7%. Up year to date, 100. I mean, look at that trend. That's just like, that is like a rocket ship. It's just going up and up and up. And this was kind of my first point that I wanted to make in this video. Is like, I saw Meta Platforms rises as TD Cowen upgrades on positive Q2 checks. Like, everyone's positive on this stock now. Like, I cannot believe like the stock market nowadays just seems to be so much. There's so much rapid change in the stock market now. You know, from stocks low down to high prices to low prices, from people being bullish on a stock to negative on a stock. The swings in the stock market just seem so more aggressive nowadays in 2023. It never used to be like that. Like, nowadays, just the share prices and how people change opinions on stocks just, you know, go so rapid. And all these people are now positive on Meta, and like, there was just no one positive on it 52 weeks ago. You know, only a year ago, nobody was positive on this. No one wanted Meta at $88. And now, you know, the stock is up at $310 or $313, and people are piling over to get involved in these stocks. People are piling to get into the stocks. Oh, you know what? I'm going to buy Meta at $313. But you know what? I'm not buying it when it was at 52-week lows of $88. It's crazy. It's crazy. Like, that is how quick the market can change, and people following the trends. Like, you think, how do people get burnt so much? Well, it's like, you know, 2022 when people were chasing, not 2022, 2021, where people were chasing them hot growth stocks more and more and more and more. And you're like, you know, how did you get to that point? You're seeing it happen straight again. You know, the market has such short-term memories. And right now you're seeing people chasing Meta at $113. Oh, you know what? I don't want that at $88. Actually, I'm going to have it at $313. It's crazy. And it just shows you that's the mentality of the market. And the market is chasing. The investors are chasing the market at the moment. Because why are investors chasing the market? Well, because if you imagine, where we were 6 months ago, or even I'd even go to the point of 2 months ago. I remember how many people are negative on the market. People going, oh, the market's not going up. Inflation's sticky. Inflation's going to carry on sticking. We're going to have a recession. I can't even begin to tell you the amount of times I heard people saying there's going to be a massive recession. There's going to be a massive recession, inflation, stocks are going to go to new 52 close. Everybody was saying it. Well, not everybody. There was a minority. Me be the minority. And, I know a few of you guys in that comment section. You guys as well were in this camp and going, I'm buying these stocks at these crazy levels. It doesn't matter where they're going to be in the next 12 months. I need to be in for the rally. And when the rally happens, it'll pay off. And we're starting to have the rally now. And you're seeing so many people chasing the stocks because you've had so many people. You've had so much cash on the sidelines. And you've had so many people and investors and institutions that have been sat on the sidelines going, I'm not buying right now. And now they're seeing the rally going up and they're seeing the S&P up, whatever it is, 17%, is it? 17, 18% year to date? They're seeing the S&P up and, how can they justify that? When they have the meetings with the clients or whoever it would be at the end of the year, how do you justify it? Well, the S&P is up at 8% and you're like flat, like you're cash. Like, why haven't you been involved in the rally? And all these people that have been on the sidelines, all these people that have been bearish on the market are suddenly going, I need to get involved now. And that's why they're piling in at Meta at $113, even though they should have been piling in at Meta when it was $88, when HIMS was $4, when DraftKings was $10. I mean, PayPal not as much because that's only recently had a little bit of a rally up. That's only had a bit of a rally up in the last kind of month or 2 months. But even there, you're starting to see people jump in a little bit now. And it's like, it shows you, there's that many people, chasing the stocks now and buying at these levels. Now, for me, I don't need to chase. I am not buying DraftKings. I'm not buying DraftKings. I don't need to buy DraftKings at $31. I've got an average below $31. I've got a very good position. I don't need to chase it anymore. HIMS, I mean, people ask me, like, it keeps having a bit of a wobble, do I buy HIMS? I set an average on HIMS of something like $6. I don't really need to be chasing HIMS right now. I mean, if it goes to $6, I'll buy it, but I've got a really good position. I'm up a lot. I don't really need to buy it. And, even though it can have, a couple of percentage dip, unless it comes to a really stupid level again, I don't really need to chase this stock. There's a lot of, like Meta, for example. I think I set on a Meta average of 150, 160 or something like that. Same again. I don't need to be chasing Meta. I've got a good average. I've got a good position. I don't want any more Meta, really. I chased it in the dip. I was buying. I went through the pain in the dip, and I've got a good average. I don't need to chase this. So I'm not buying any of these stocks anymore. I'm not buying any growth stocks. I'm particularly not buying a lot of growth US stocks at the moment because everyone's jumping in now. Everyone's going, oh, look, interest rates won't carry on going up that much. Inflation is down. What a surprise. Now I'm buying the stocks right now. I don't need to. I took advantage. I had to sit through the 12 months of pain of stocks going down and down and averaging. But now I get the rewards and I'm not chasing. Everyone else is chasing. All the big institutions are chasing. All the cash on the sidelines chasing these stocks now. I'm not chasing. I'm well positioned now for all these kind of stocks. So I'm not buying these anymore. Everyone else is buying them. I'm not buying them because I'm happy. I've got my positions. I've got good averages. I'm letting them run now. And these stocks are chasing up now for the next kind of 2023, 2024, 2025. A lot of these at the moment are just entering the bull market. The average bull market is 4 or 5 years. So these stocks potentially could now rally for the next 4 or 5 years, and I don't need to buy any more of these anymore. All I will do probably now is just nibble a little, trim a little bit. Every kind of like 1%, 2%. I might trim every couple of positions just slightly to just take a bit of profit off the table. That's all I'll probably do with them positions now. But I'm going to let them run for 4 or 5 years. If we're in a bull, if this is the new bull market, I'm going to let these run for 4 or 5 years. And the average return in the bull market, I mean, look at the S&P 500. There's a bit of an error in this article by Forbes. The average return for the S&P 500 is 209% in the bull market, not bear market. I would expect better from Forbes, especially with how much you charge for your articles. But anyway, the average return is 209%. If the average return in the next bull market is 209%, you imagine what DraftKings is going to return in that time frame? Like a stock that's way better than the market average company. HIMS, PayPal, Meta, these are all high quality companies. If the average return is 209%, in the next 4 or 5 years, I'm going to be sitting really nicely on some of these stocks. So I'm not chasing them anymore. So the next thing is where's the opportunities now? If these aren't what I'm buying, There's always opportunities in the market. 2022, where was the opportunities? It was in growth stocks. 2021, where was the opportunities? It was in dividend stocks. Everyone went, I don't want to collect a 2% dividend yield. I want to go get that growth stock that's returning 100% in 2 weeks. I'm going to buy the growth stocks. No, but so that was the opportunity in 2021. 2020 obviously had the CV dip as the opportunity. There's always opportunities in the stock market. It's just that sometimes they're harder to find. That's always the tricky thing. Sometimes they're obvious, sometimes they're staring you in the face, like the growth stocks in 2022, and then sometimes it gets a little bit harder to try and find those opportunities. Now, for me, I'm looking at the opportunities, and I'm actually looking a bit closer to home. I've been obviously buying a lot of US stocks, but now I look at the opportunities in the UK market. And the reason why I look at the opportunities in the UK market is because inflation at the moment, we've known true inflation has been dropping rapidly. You know, it's at 2.1%. We could actually see 1% on true inflation, which would be really scary to see. That would start to suggest that we're moving towards deflation, which wouldn't be good. But anyway, that's a topic for another day. Where's the opportunity? It's in the UK markets, I think. You know, the inflation at the moment is 11%. It's a mess. The UK economy is a mess. Inflation's a mess. There's a lot of profiteering from higher energy prices, fuel prices. There's supermarkets are profiting from it. There's a lot of companies that are profiting from the inflation at the moment, and it's made an absolute mess of the economy. Now, it's an issue, and it will carry on being an issue, and it will be an issue for probably the next 12 months. And if you're expecting good returns in the next 12 months, it's probably not going to happen. But where it comes as a long-term investor is where I look at something like this and go, I had to sit through this pain for a year and a half, but I don't mind it because I'm not investing for a year and a half. I'm investing for what the company will be doing in 4 or 5 years, and I'm sitting at DraftKings now going, I've got a really good average. I'm looking for, where this company is, if you come back in 5 years in 2028, I think my average will look absolutely bang amazing, and I'll be doing really well. So I'm not looking for a year and a half. I can sit through a year and a half of pain, as you've seen before. So I'm looking at this going, I'm willing to sit through a year and a half of pain in these UK stocks to realise when we get out of the pain, the UK inflation will be dealt with. Interest rates will come down and the stocks will recover. And that's what I'm thinking. I'm thinking I'm going to have to go through another year and a half of pain here. But once again, will I get the rewards in the longer term like we've seen in the US market? And that's what I'm seeing. I think that we'll see it come down. I think we'll see natural gas prices are coming down, and when the profiteering stops, inflation will come down and we'll see the rewards. And then you look at something like Legal & General, for example, a company heading towards, CV kind of lows, 6 times earnings, 8% dividend yield. I think this is a company that you'll see in a few years' time that is a lot higher share price appreciation, and you're collecting, nearly the S&P's average return in the stock. I'm looking at a company like Airtel Africa. This company's getting hit by the Nigerian currency really devaluing against the dollar, and that's causing massive profit issue. And we actually talked about this on the Discord the other day, and it was a really good chat. And it came down to, I was saying maybe it's worth selling and then buying in, because if the devaluation happens and hits the earnings, the stock's going to go down 20%. And then, stepping away from it, I was like, but that's really day-to-day kind of gambling. I'm gambling that it is going to go down 20%. That doesn't really, as a long-term investor, that shouldn't matter. The currency fluctuations for me shouldn't matter in the long term, because that's not going to be around for a long term, more than likely. In the long term, 4 or 5 years, that probably won't be an issue. The bigger issue will be, has Airtel Africa still capitalised and grown the profitability? And if that's happened, I'll be collecting a dividend. I'll collect a really good share price appreciation, and this stock that's really been beaten down, then will turn out to be a good opportunity. So maybe I have to stick through the year of pain of a weak Nigerian currency that affects this company. But in the longer term, that's what I'm here for. It would be a good opportunity. And one glaring opportunity right now is in the UK housing market. Anything UK housing market related, construction, actual house builders, something like Wix, for example, anything house related is taking a massive beating. Obviously because of inflation, the fear of interest rates going higher and higher. That's the worry. You look at Barratt Developments. Barratt Developments is sitting at the prices it was at the CV lows now. When that big amount of fear at, we're identical levels of fear right now. From the time where, the country's shutting down so you can't sell houses, is the same level of fear of where we're at right now, where interest rates are sky high and inflation is sky high. And what do we learn from the CV times? We get out of the situation. And same again, it took around a year to get out of that situation. you would have had really good returns. Same again, a year's time, we'll be out of this situation. We'll be out of the situation where inflation calms down, interest rates does calm down, and then when that starts happening, you'll see these stocks, people start chasing these stocks now, and their stocks start going up. So isn't the opportunity right now to be buying these companies? And you look at something like Bright Developments, they actually came out with their update this week. I think it was either full years or half year accounts, and they were saying about how weak the demand is at the moment, and it's what's to be expected. But what I found interesting is that the stock actually did take a little bit of a tumble on the share price. I mean, it was down 5%. But what did we see in the next kind of coming, couple of days? It basically recovered it all. So basically, Barratt Developments has come out with this, news and this update of things are getting quite bad here. But when you look at the share price, it's not being priced in at all. It's not reacting at all. And then the reason why is because it's already priced in. It's already priced in. These companies are going to be hit on, the profit, the revenue, the house sales. So that seems like it's not going much lower. So the fact is that when we do see the signs of maybe in a year's time of the interest rates calming down, inflation calming down, everyone's going to get excited again and everyone's going to be chasing this stock. And we don't want to, I would rather be sitting on here for a year and have a really good average and be at the point when everyone starts chasing this stock. I just sit back and go, I don't need to chase it. I will buy in a year ago. I had to sit through a year of pain, but now I'm getting the rewards. Everyone else is buying in and chasing it now, and then it starts going up £5, £6, £7. But I just sit back and go, I don't need to chase it. I'm in a good position here because I took the year of pain, but now I'm doing really well. And as a long-term investor, that is the part of it. You probably will have to stick. There's times where you sit through a year of stocks doing nothing, a year where stocks potentially go down, but that doesn't matter as a long-term investor. You're thinking about where it's going to be 4 or 5 years. And I look at Barratt Developments and you think 4 or 5 years, I think we still have a major, shortage of houses in the UK, which we will need to deal with, and is an issue, and we'll have to build more houses to try and resolve that. So they will benefit from it. And look at 4 or 5 years, will we even remember that time where interest rates went a little bit high? I don't think so, and we should see the stock do really well. And once again, you'll be picking up probably some share price appreciation because it shouldn't stay at these sort of levels for that long. And then you're thinking, well, I'm also going to be picking up. They'll probably be doing some of the old levels of profitability and revenue, and you're probably picking up 8% dividend yield. You're getting the S&P's nearly average return every year as well, which would be absolutely amazing. So anyway, that's just food for thought. My thought process at the moment. The stocks that I'm not chasing and I'm not buying anymore, I don't need to buy them anymore. And then where I'm kind of looking at opportunities at the moment, and I clearly see a lot of opportunities in the UK market at the moment, and that's where I'm now, pivoting to. And my strategy is kind of pivoted to is them kind of UK stocks, especially a lot of these value dividend stocks seem really incredibly low at the moment. Anyway, so hope you enjoyed the video anyway, guys, and have a great weekend. Catch you in a bit.